Hello guys, today we have another technical video. We're looking at a new pattern which is called the flag pattern. So basically it is located at the end of a large impulse. It has two highs and two lows and it looks kind of like a flag. I really like this pattern because it's so simple to spot. You just look for that large impulse and you look for that formation. Of course it is a continuation pattern, so usually the price continues with the trend or with the impulse that you're looking at. This is a really good pattern if you're trying to pass a prop firm challenge because it brings a high risk to reward, maybe 1 to 5, 1 to 8, maybe even 1 to 10. And that is exactly what we need for the two-step challenge. So again, we need to make 10% in 30 days and 5% in 60 days. So if you're starting FTMO or MyForexFunds, definitely take a look at this pattern. And just a reminder, FTMO link is in the description, so check it out. This pattern works on most instruments. I have only backtested it on the 1 hour chart because I'm trading only the 1 hour chart. I'm not going up, I'm not going down, I'm sticking to that 1 hour. And I'm trading it on 6 pairs, so EU, EJ, AU, AJ, GU and NJ. What you need to do, you need to watch this video, you need to see how this pattern forms, and then you need to go to the charts, do some backtesting, and you will see how easy and simple it is to spot this pattern, and usually it brings some really nice percentage. So your job is to investigate how this pattern forms and then backtest it on the 1 hour chart for the past 5 years, and you will see for yourself that it really works. So without further ado, let's get on to TradingView. Okay guys, so we're on the charts. This is the euro and the US dollar, and we are now at the 18th of May 2020. What we're looking for a large impulse up or a large impulse down. We have just got this really nice impulse to the upside, so we got some really nice momentum. And what we are looking for now is a flag pattern, which is the first high, then the first low, second high, second low, and then we're looking for an entry candle, so either bullish or bearish after the flag forms. If we're buying, we're looking for a bullish entry candle, and if we're selling, we're looking for the first bearish entry candle. Again, this is only on the 1 hour chart. I look at only the 1 hour chart, and this is what we need to see. So price then keeps moving. Then we have this counter trend candle. So we now have our first high, this is the first low. Then we wait to see what will happen. We wait to see this line, how it breaks. Still has not been broken. Now we broke the line. So let me just zoom in a bit for you to see a bit better. Now we have broken the line and we have actually formed our flag. So we have the first high, first low, second high is for me is here, and the second low is here because it broke the line of the first low. And now we're looking for the first bullish candle to enter on this nice flag. So this one is red, this one looks to be blue, so this is a bullish candle, and this is exactly what we're looking for. So right here I now have a perfect flag formation. I have a large impulse, I have no momentum shift in the flag, so all of the candles are pretty small, they're not showing momentum to the downside, they are pausing, which is a really good sign that there is no momentum to the downside and that actually the buyers are in control. This is exactly what we want to see. We want to see these small pausing candles, and then I'm placing my order at the end of the hour. Of course, because we're trading the 1 hour chart, I put in an order only at the top of each hour. So at 5 in the morning, in this case, I place an order with a 12 pip stop loss. So for the euro and US dollar for flags, I always use a 12 pip stop. So right here, I place a 12 pip stop loss, and then we replay the price action. We see what will happen, and price continues moving to the upside, gives us a nice uptrend, and let's see what happens. So right here, I'm starting to implement my stop loss trailing rule. I will go over it in another video, but for this one, I'll just move my stop loss according to my rule. I will make a separate video about the trailing stop loss. So yeah, we're just waiting to see what will happen. I still have not moved my stop loss. Now we have broken the most recent high. I can move my stop loss underneath the most recent low, which is right here. So now we're in some profit, and then let's see what happens next. Price breaks the high again. We can again move our stop loss underneath the most recent low, which is this one right here. So we're banking more profit, and let's see what happens next. Price takes us out for 4.24%. That is if you're risking 1% per trade as I am. So if you're in a challenge, you just made 4.24%, which is really nice. So you're kind of halfway there to pass. And let's see what happens with the price. So price then reverses to the downside. Again, a really good trade, a really easy trade. Look how simple this is to spot. You're just looking for a large push up, you're looking for these pausing candles, you're looking for the flag formation, which is first high, first low, second high, second low, then first bullish candle, we buy, 12 pip stop loss, always a 12 pip stop loss, never change it, and price just goes up. We move the stop loss according to our rule and we get taken out for some really nice profit. Okay, so here we have another example on the euro and the US dollar. This is the 20th of August 2021. What we have here is we have a large impulse to the upside and it's coming from a descending structure, which makes the trade even higher probability. So when price is coming from a descending structure, we expect it to start trending to the upside. So this push up is expected to continue because the methodology is, well, the market makers are taking out people's stops. So traders are going long here, going long here, going long here. In each of these legs, they're going long and then they get taken out with this move. Right here, the low is broken. Market makers take out the stops, they fill their long positions, and then we're ready to go up. That is exactly what we try to do in Forex. We try to determine what the market makers are doing and we try to follow the moves of the market makers, because retail traders lose 90% of the time. Who takes their money? Well, the market makers. So you want to be following what the market makers are doing. So yeah, we now have our impulse to the upside coming from a descending channel. This is very high probability to go up. What I'm looking for now is I'm looking for the flag formation. First high, first low, second high, second low. Let's see what happens. We get a counter trend move and then we look for our formation. So the high has still not been broken here and we have now formed our first high and first low, and now we're waiting for the break of the low to see what will happen. Price breaks the low and then we have our full flag formation, but we don't yet have our entry candle. So now we have our first high, first low, second high, second low. Of course, this candle broke the first low. Now we're looking for our bullish candle to enter. Let's see what happens. Another red one, so we don't enter yet. And now we got the blue one. This is exactly what we're looking for. We wait for top of the hour, then I buy with a 12 pip stop loss, and we then see what will happen. So price immediately starts going up. I move my stop loss underneath the most recent low. Again, that's my trailing stop loss rule. And then we see what happens. We get taken out right here. Now in this case, yeah, I would have been taken out for 1.3%. But what I wanted to show you is how the price is going to the upside. That is exactly what we're expecting from a descending channel, and it's still a winning trade. So I will take a winning trade any day. And this is a really good trade, to be honest. Look, price continues going up. So no matter that we are taken out, but we expected the price to start trending up. And yeah, a really clean flag formation. You can see right here, there is almost no momentum shift in these red candles. I'm seeing no indication that the sellers are in the market. What I'm seeing that the buyers are clearly winning, then a small pause, and then the buyers continuing, and of course price starting to trend to the upside. Okay, now we're switching it up a bit. This is the Aussie and the US dollar, of course, 1 hour chart. This is around the 4th of April 2022, so really fresh price action. We will see what happens. So prior to the large move up, we had this range right here. And of course, what we're looking for the flag formation, we're looking for a nice impulse to the upside. That's exactly what we got. We got some really nice momentum and conviction. Look at this. So 4 consecutive blue candles showing me some really nice momentum to the upside. I'm definitely looking for a flag at this point. So we're seeing, replaying what will happen. Now, just as a lesson, what I don't want to see in the flag formation, I don't want to see a big bearish candle down, because that would show me a momentum shift. What I'm looking for those really small pausing candles, because that shows me that there are almost no sellers in the market and that the buyers are clearly winning. If we get a really big red candle, well, that's an indication that the sellers are in the market. Do we want to be buying if we see a clear indication that the sellers are in the market? We don't. So let's look if we get some nice pausing price action. Now we are getting some really nice ranging candles. We have now formed our first high and first low. Again, this candle up is counter trend. That is the reason this is our low. Let's see how the low is broken. Will the low be broken with large momentum and a huge red candle, or will it just be broken by a little bit and then a retrace? We're looking for a little break and a retrace, signaling that there is no selling pressure. So let's see what happens. price breaks the low and retraces, this is a really good flag formation. This looks high probability to continue to the upside. Buyers are clearly winning in this case. And let's now draw our first high, first low, second high, second low. We're waiting for the first bullish candle, of course. So this candle, let's see if it's red or blue. So this candle is still red. We're looking for a blue one. Let's wait a bit more. So now we get our entry candle. We place our order on the top of the hour, market execution, of course, with a 12 pip stop loss. I used 12 pip stop loss both for the euro and the US dollar and the Aussie US dollar. I'm now in this. I'm now replaying to see what will happen. So price shoots to the upside. That was some sort of a news, but we don't look at news when backtesting. So I'm not concerned with news. I never look when there is a news event. I just trade according to price action. But yeah, this was a really nice trade. And then price continues going up. So let's see if we can reduce risk, put some profits. Now I can move my stop loss into profit, of course, and underneath this most recent low. And let's see what happens next. I get taken out for 7.1%. A really good trade. And this is a really good example of what we need to see in the flag formation. We need to see small candles. We need to see small candles moving sideways. So they're not moving down, they're not moving up. They're moving sideways. They are ranging. We need to see a range. Some of you may be wondering if this large wick on the top is a warning sign. Well, it is. But if the flag formation is really clean, if there is loads of candles just ranging around, loads of small candles, I can tolerate a large wick on the top of the impulse. So for me, this is a textbook formation. And just look how easy it was to spot. So right here, we're looking at the impulse and then our formation. Some of you may be asking, well, why didn't we look for a formation right here? After this impulse, well, I was looking for a flag formation, but we didn't get it. We instead got a counter trend move, broke the high, retraced. So this flag formation is an indication that there are no sellers in the market. That's why we look for it. And it is a great entry pattern to confirm that the buyers are in control. Here we have another example on the Aussie US dollar. This one was around the 18th of October 2021. So what I really like about this price action, well, we have this large sideways range. What do we know when we see a range? There are liquidity areas below and above the range, of course. So on the lower time frames, buyers are buying here, sellers are selling the top. They have their stops below or above the range. And that's a really good liquidity area to get taken out for the market makers to fill their position. What did we say about ascending or descending channels? So right here we can spot a nice descending channel. Well, we said that it is the market makers taking out the retail trader stops. And usually after a descending channel, price reverses, or after an ascending channel, price reverses to the downside. So this is a double combination of a liquidity grab. So first we have a liquidity grab from this flat range, and then we have a liquidity grab from this descending channel. So this is absolutely high probability to start trending to the upside. I'm definitely looking to buy here. You cannot ask for cleaner price action. And of course, I'm seeing confirmation that the market makers are buying. I'm seeing a large impulse to the upside. It's looking really, really nice. I'm seeing some large momentum and I'm looking for a flag pattern. So let's see what happens. Price then pulls back and starts ranging a bit. So we now have our first high and the first low. We can zoom in a bit. So we now have our first high, first low. We're looking for the second high and the second low. It all depends how this low is broken. So let's see what happens. Price breaks the low. Now some of you may be wondering that this red candle is pretty big, but for me, because we have everything going great in the prior price action, the prior price action is so clean that this is not a big warning sign to me unless it continues, unless the next red candle does something like this. This red candle on its own is not that big of a concern. And to be honest, it's not really that big either. So we can see its size in the relation of the impulse, and it's kind of the same as the impulse candles, even a bit smaller. So not a big concern when I take into account how clean the prior price action is. Now I have my flag formation. I have the first high, first low, second high, second low, looking for the bullish candle. Let's see. This one is blue. This is our entry candle. I then use a market order to buy with a 12 pip stop loss. And we're now in this trade. We're waiting to see what will happen. And of course, price goes to the upside. I can reduce my risk here because there was a counter trend move. I put it below the most recent low. Price continues up. and we break the high. Again, I can move my stop loss bit further, and now waiting to see what will happen. So price continues going up, another counter trend move on the top. I move my stop loss underneath the most recent low, and then we get taken out for 5.3%. Another really good trade. So this would have passed your verification and you would be halfway to passing the challenge. So usually these types of setups, these types of liquidity grabs work out, I would say 9 out of 10 times. They're so freaking high probability. They're a bit rare to happen, but when they happen, boy, you want to be in those trades. So yeah, the flag entry continuation pattern is really powerful, but what is also important is that we have some large momentum so that we have a large impulse, and of course that the prior price action is clean. So we either need to have trending prior price action as you saw on the euro and the US dollar, or we need to have some sort of a liquidity grab, some sort of an indication that the market makers have taken out liquidity and that they're ready to start a trend in one direction. That's why I really love these descending or ascending channels. They're so high probability to reverse and start trending in the opposite direction. And please remember, these setups will not work out every time, so the win rate is around 40 to 50%, but the risk to reward is so big that the winners far exceed the losers. And that is just the reality of trading. You're not going to win every single trade, especially in Forex. The win rates are pretty low, but the risk to rewards are pretty high. Okay, we're now moving on to the Aussie and the Japanese yen. So let's take a look at this price action. We're of course identifying our large impulse to the upside, but also we need to see how the prior price action looks like. So I'm seeing a V reversal and I'm seeing a range. So right here there is a V reversal, and then price started ascending to the upside, giving us sort of a corrective ascending range. So for me, this is high probability to go up. If you see a V and then a range in the markets, usually price continues in the direction of the second leg, which is up, or if it's the opposite, if there is a V like this and then a range, it usually goes to the downside. So for me, this impulse is high probability to continue to the upside. I'm definitely looking for a pullback. I'm definitely looking for a flag formation. So let's see what happens. We have our large impulse. We have identified that the prior price action is high probability to start trending to the upside. Let's see if we get our formation. So we now have the first high and the first low because this candle is counter trend, and then we break our low. So we now got our flag formation. So this low is actually higher than this one. That is why this small candle is counter trend, and that is why this is our first high, first low. This would be our second high, this would be our second low. Now we are of course waiting for our blue candle to enter on the structure. So let's see what happens. We now get our blue candle, and it's a really strong bullish candle, indicating to me that the buyers are clearly stronger than the sellers. I actually see no evidence of sellers. I see no momentum shift to the downside. I'm seeing only small pullback candles, and I definitely want to buy on this candle. So I execute a market order on the top of the hour. I use a 12 pip stop loss. So on the Aussie and the Japanese yen, 12 pip stop loss is all you need. And we now have all of the criteria. So prior price action is high probability to go up. We have our large impulse. We have our small pullback and the flag formation. No momentum shift in the pullback. Really small candles moving kind of sideways. So definitely high probability to continue up. Let's see what happens. Price starts trending to the upside. I'm still full risk. I still have not reduced my stop loss, and now I can reduce my risk underneath this most recent low because we have broken the high. So let's see what happens next. We again have a counter trend move and we break the high. I reduce my risk a bit more. I'm now in some really nice profit. Let's see what happens next. And then I get taken out for 2.2%. But I believe this starts also trending to the upside. So yeah, this then shoots to the upside. Again, you can see the power of this setup. Unfortunately, I did get taken out. It's a part of the trailing stop loss rule that I use, but it doesn't really matter. What I wanted to show you is I did bank some profit and the price continued moving to the upside. That is the power of having high probability prior price action, having a large impulse, and having no momentum shift in our flag pullback. Okay, so now we're on the euro and the Japanese yen. Of course, the 1 hour chart. This trade was around the 17th of June 2021. Price is clearly trending to a downside. So this is high probability to continue the downtrend. Again, what we're looking for is either a strong downtrend or uptrend, or we're looking for a high probability pattern where the liquidity has been taken out. In this case, we just have a simple downtrend, very easy to spot. Any trader can identify that the price is heavily trending down, and of course we are expecting for the price to continue trending down. That's why I want to be searching for a high probability entry at this current point. So let's see what happens. We have formed a large wick here, a bit of a warning sign, but let's see what will happen. So price pulls back here. Let's see what happens. We now have our first low and first high. This is the first low, this is the first high. So let's see how the first high line is broken. Let's wait to see. Price breaks our first high, and let's now wait for our entry candle. Right here we have a red bearish entry candle. We have our flag formation, first low, first high, second low, second high, entry candle, bearish, a market order selling this pattern. So we enter on the top of the hour, 12 pip stop loss on every pair. So let's see what happens. And just a reminder, this is a very high probability. You just look at the size of these candles. You can see that they're pretty small. Compare it to the size of the impulse. Look how big the impulse candles are. Look how small the pullback candles are. That is what you want to see. You want to see no momentum in the pullback. You want to see a flat sideways range, signaling that the sellers are still in control. There is just a small pause and that the market is high probability to continue trending to a downside. This large wick has now been negated. As I said, it was a bit of a warning sign, but because this pullback is so clean, I'm seeing 8 candles in the pullback. So price is starting to range. Usually after a large wick like this, we get a small range. So I'm very happy to place an order here. This wick for me is negated because the pullback is so clean. Now that is something for you to backtest. Go to your chart and see what happens after a large wick. How many times does it continue down, and how many times does it reverse? How does the pullback look like when the price continues, and how does the pullback look like when it reverses? Okay, so now I'm in this trade. Let's see what happens. Price then goes to a downside. I'm still full risk. We're waiting to see what will happen. So let's see. Price breaks the low. I can now put my stop loss in some profit right here above the most recent high, and let's see what happens. Price continues trending to a downside. We break the low again. I can put my stop loss underneath the most recent high again, go into some more profit, and let's see what happens next. So price breaks the low again and then shoots to a downside with some large momentum, and then reverses, takes us out. Let me see. So my stop loss was right here, takes us out for around 3.75%. Another really good trade. I'm really happy with this percentage. And I mean, it's just so easy to spot. You're looking for a trending market, you're looking for a large impulse, you're looking for a small flag formation pullback, and then you just sell. Price usually continues trending down. You bank some really nice percentage. So trading is really simple. I mean, it's not easy, but it's simple. I think that anyone can spot this formation. And I would say the key is that you don't get a momentum shift in the pullback. Again, what I don't want to see, I don't want to see a large blue candle like this one. That is showing me a clear momentum shift. That candle would be as big as these bearish candles. And again, I don't want to see a momentum shift. I want to see just a pausing, clean pullback with a few candles and then my flag formation. So that's it for the video, guys. We have gone over 4 pairs and we have got some really nice long trades, some nice short trades. As I said, this pattern won't work out every time. The win rate is around 40 to 50%, but it brings some really nice risk to reward, some really nice percentage. So it's definitely worth taking. Please go on your trading view, backtest this setup. You can do it on any sort of a time frame, but just stick to one time frame, either on the 1 hour, 15 minute or the 5 minute. I'm trading only the 1 hour time frame, and I have only back tested the 1 hour time frame, but this continuation pattern works on every time frame. Again, I have now showed you what to look for. Go on the charts, look for yourself, and do some research. If you want to know more about these patterns or want to learn some more advanced concepts, then book a call. I offer 1 hour coaching calls. Link is in the description. If you want to get funded with FTMO, use my link from the description. Like this video, subscribe to my channel. Also check out some of my other educational videos. So this is part 3. I have already gone over 2 of these types of high probability entry patterns, so definitely check them out, and I will see you guys in the next video.